So Robinhood has been on quite a ride with the stock over 50% down in just the last 6 months alone. As of this week, they announced super exciting news that could be an absolute game changer for the company and their future. So stay tuned. We're jumping into those news right after the intro. Hello and welcome to another video by HKCM Global. My name is Joe. So Robinhood. Yes, we're talking about Robinhood. Super interesting news out of Robinhood. Let me just give you a quick rundown on what we're talking about. So Tuesday of this week, Robinhood came out with a big announcement. They are launching their first venture capital fund. It will be available from February 22nd, so next week, and will be openly accessible via the New York Stock Exchange. Of course, right now you can already start requesting your shares directly within the Robinhood app, but from the 22nd forward, then everybody with any broker can of course purchase those shares because it is publicly traded at the New York Stock Exchange. So then what exactly is it that is publicly traded on the New York Stock Exchange? It is a closed-end venture capital fund that will be managed by Robinhood. Lots of fancy words. What do they mean? So Robinhood launched this fund with the promise of it being the democratization of venture capital, meaning this fund aims to invest in companies that are not yet publicly tradable. So those amazing unicorns that investors and millionaires and probably more billionaires can fund and invest into and then blow up their wealth even more. Those private companies, those unicorns, in most if not all cases, are investment opportunities that are closed to the regular retail investor, because there is no way for the retail investor to put a small amount of his own money and savings into those companies. And Robinhood aims to change that, because with their fund, they will be investing into yet still private companies that are super promising for the future. So companies that might turn into unicorns one day or are already unicorns, like for example Stripe. And then of course, those investments into those unicorn companies, those yet private companies, will be all accumulated in this RV1 fund, and you as the private investor, as the retail investor, can then purchase those shares to this fund. So it's a little bit like, maybe for example, you can compare it to Berkshire Hathaway, right? Because there's a very clear distinction to be made. So if we are talking about an ETF, for example, SPY, right? If many investors want to purchase SPY shares, they will just give out more shares and increase their holdings in the S&P 500, right? So that's what an ETF is doing, right? Everything is controlled, everything is very scalable. Different story with a closed-end fund. So a closed-end fund has a fixed volume and has a fixed amount of shares. In this case, the target volume is $1 billion, and the shares given out initially at $25 a piece. And so if the holdings that RV1 fund then increase, of course, share price should also increase. But then on the other hand, if the RV1 fund is super high demand, the share price of those shares can of course rise significantly higher than what the accumulated worth of all these companies would be. Same story then of course on the other hand, if the RV1 fund is in no demand whatsoever, the value of those shares could also drop lower than the accumulated sum of all of these companies in that fund. So pretty similar, like for example what Warren Buffett is doing with his Berkshire Hathaway, right? So Warren Buffett is investing into companies, and of course his portfolio has a certain worth. He has cash reserves and he has shares of many different companies. And if you multiply all of the shares that he holds in these companies with the share price, and you also add his cash reserves on top, you can exactly know what is the total worth of Berkshire Hathaway as a company. However, the total market cap, so the share price of Berkshire Hathaway shares multiplied by all their shares, does not necessarily need to hit the exact same number as the accumulated worth of the company. So does that explanation make sense? I hope so. Same story here with the RV1 fund in Robinhood. Super interesting stuff. So then of course, next interesting question to be answered is what companies will be included in this RV1 fund? And the answer is, for now, I can tell you with certainty. However, for the future, nobody knows, because it is an actively managed fund. But for starters, right now, we're starting off with investments in Databricks, Revolut, Aura, so SmartRings, Airwallex, Ramp, Boom, and Mercor. And of course, Stripe, there is still talks. They probably will buy shares post IPO of Stripe, so they will not be included when the RV1 fund launches next week, but Stripe will definitely be added in the future. So that is a given yet. And there is also rumors, but again, just rumors about also including OpenAI shares pre their IPO, so even before they will go public, and also talk about them including SpaceX shares before they will go public. However, stock price overall didn't react quite as enthusiastic as I'm presenting this right here, but remains to be seen. So after this huge sell-off that we saw in Robinhood, and again from the top which we saw in October of 2025 up until the low in the market, which we saw also not this week but last week, so on Thursday of last week, the 12th, we saw the so far low in the market at roughly $70 a share. That is then a 54% drawdown from the top. And of course, after such a violent drawdown, by the way, in the midst of this drawdown, we had already placed a successful long target zone here. And if you are interested in receiving those target zones ahead of time and not learning about it in those videos here on this channel for free after the fact, there's a link down there in the description taking you to our website. Over 200 assets which we analyze on a daily basis: cryptocurrencies, stocks, commodities, oil, you name it. You'll get daily updates, a model portfolio, you will get push notifications for entries and exits. If that's interesting to you, link down there in the description. Also, there's a huge discount coming up for a new special package that we are launching. So I'd highly encourage you to check that out. But then these target zones here, we give out, of course, ahead of time. And even within this sell-off here in Robinhood, if you had entered just at the top here of our target zone, so no exact bottom fishing, just entering bluntly here at the upper boundary of our target zone up until the top, we would already have seen a 30% run within this ongoing correction. And of course, we did take profits here along the way. And admittingly, yes, we also placed another target zone here because we anticipated that the sell-off would already come to a stop earlier, which, as you can see, was not the fact. So this target zone here was destroyed and we were stopped out here with our trade. And we, of course, had to adjust our count because this target zone then was based on a previous count, which was invalidated by the market action. But that is how it is in the stock market, right? No prediction is 100%. It's always a game of probabilities and you cannot win every single one. You just have to make sure that you win more than you lose. That's the name of the game. Right. So in the overall count, we do conclude that the low for the wave W here is in, and we will see a run for another roughly 50, 60 to 70% even in the midterm, in a relief rally for Robinhood before we do see further risk to the downside in roughly, and please do not take this as gospel, we will define target zones as we go along, and as we gain confidence that this low really is the low and will not be replaced by a new low, we will see a risk to the downside of roughly another 60% give or take. And we can of course predict that with more certainty as soon as we have established the pivot here for this wave X. But for now, what I can already see here is quite a bit of confluence with the potential overlap of the 200-week moving average. So this yellow line, which you can see here coming in, is the 200-week moving average for Robinhood. And if we just extrapolate this and have a very rough guess, so this is just a very rough guess where this might be headed, we could really see a picture perfect confluence here with the 200-week moving average and our wave 2 low, which we predict in the area of roughly $50. And then of course I will be buying big if this is to play out. 200-week moving average, as you know, usually super interesting buy-in opportunity. If a stock gives us this opportunity, usually good idea to make use of it. And even more so, of course, if it aligns with our Elliott Wave count here. And so this would be super interesting opportunity, but remains to be seen. But for the midterm, as mentioned before, we will probably see another relief rally coming into Robinhood here in the unfolding of the wave X. And again, here RSI absolutely confirms this as well. We are in the RSI at levels rarely seen before. So currently, short-term RSI peaked down to a level of 15.5. 15.5. This is so incredibly low. Let's maybe go back in the past. So back here with this low, 2024, we did not manage to hit 16 at all. Far from it. We peaked down at 24 was the lowest here. And I need to go back into 2021 when the stock was completely annihilated after its initial IPO, and then of course the collapse of the crypto market, the NFTs and that whole story, and the collapse of course also of the meme stock game. So Robinhood was hit hard back then and also dropped down to the exact same lows of 16 in the RSI. And back then, yes, admittingly, this was not the bottom yet. But by the time we hit those levels in the RSI, most of the damage was done, and what followed was good opportunities for long-term entries, and similar do we expect today. As just discussed, not the best opportunity for a long-term entry, but a good one nevertheless. Short-term outlook, however, looks somewhat different. So we are now here in the direct undercount. If we just again take you here to the overreaching chart, this wave W here and this wave X here is what you can now see also on the imminent chart, because this was the day chart. We always have two different charts on two different time frames, giving you a broader outlook and giving you a more narrow breakdown of what is happening. And here then on the 4-hour chart, this here is this very same wave X, and this is the very same wave W here with the low as of last week. And you can see here that we expect in this overreaching wave X an undercount here in red of also a wave W, X, Y. So the very same corrective understructure, which we already see in the bigger picture. And so here in this direct undercount of this wave X, we will see an initial wave W here into the area of roughly the upper limit of our initial target zone that was destroyed recently, and then another corrective move to follow to probably lows into similar levels as we see right now in the chart. So this area of roughly $80 is what we see here before we march off to then new highs in the area here of roughly 110, 120-ish. So this is the area which we see here in the short to midterm for Robinhood. And this is then the area where I would definitely be taking profits if I'm going into the market or have already made use of these cheap buy-in opportunities, because what we see here is definitely more downward action for Robinhood to follow. And if I would not be taking profits here, I would definitely pull my stop loss here, maybe to the lower limit of our target zone, or to the then already established pivot point of the wave X here, to at least not endure any losses if Robinhood is to follow through with the scenario that we see here on the chart, with another wave Y low coming in, establishing the overreaching wave 2 pivot, which in the grand scheme of things would be amazing news, because this will be a generational buy-in opportunity, mark my words. And so then see you in the next one. Hope that was helpful. Take care. Bye bye.